Well, thank you, Dr. Ibrahim and Dr. Ishaq, for presenting the report. I'm sure many people have already read as much as they could of it, or those people online either have or will read it after the session. There's a lot of material there, but thank you for presenting the main points. We have two panelists to join us in conversation from the World Bank, Dr. Roberta Gatti. She's the chief economist of the Middle East and North Africa region at the World Bank. And 2 weeks ago, with you and your colleagues, launched the World Bank's report. And I know you want to comment a bit about the interconnectivity between the findings there and the findings and recommendations of this report. We're also joined by our friend, Dr. Jihad Azour, the director of the Middle East and Central Asia Department at the IMF. The IMF has been mentioned a lot in this presentation and report, and I'm sure Jihad has a lot to say. Let me start with you, Roberta. There's a lot of findings and recommendations in the report as I was reading this and recalling the report that you yourself and the team at the bank launched. There's a lot of interconnectivity between the necessity for reform, necessity of going beyond the usual methods. But give us your top line reactions and thoughts on this report and how it relates to the bank's work.
Thank you, Paul, for having me here, and many congratulations to Dr. Ibrahim and Dr. Ishac and the whole commission for a frank and really thoughtful report. It shows that it's been written by people who understand the region deeply and love it. And on top of it all, it's even short. So I really recommend that anyone who's interested in understanding the challenges of the region reads it. Now, we were here 2 weeks ago to discuss the current outlook for the region and how it connects to the pre-existing vulnerabilities of the region. So let me just say 3 things about the current outlook. So this is a year where the region is actually growing quite strongly at 5.5% is the fastest growth rate since 2016. But what we see, it's a bifurcated growth. And the bifurcation happens because of oil prices, and oil exporting countries are growing very strongly, while the prospect of oil importing countries, if we look at the change in expectations for the growth forecast, have been worsening over time. Why so? Because of these two sort of big trends that have happened due to these overlapping crises, the pandemic and the war in Ukraine, the increase in oil prices and the increase in food prices. Now, oil prices benefit some, so we see this unevenness across the region, but higher food prices are detrimental to all because our countries are food importers. Now, we all worry about inflation because we know it's a regressive tax. And if we look at the distribution of expenditure of different percentile of population in countries, up to 60% of the spending of the poor is for energy and food. So this is something that worries everybody a lot, and it's really hard, strongly felt, particularly by the poor. The MENA region has been doing quite well in terms of controlling inflation. For example, in Egypt, inflation now is 15%, which is high, but we computed that it could be counterfactually higher by the tune of 4 percentage points. And this 4 percentage point in inflation that have been sort of kept away are the result of policies that are a tradition in the region. And Dr. Ishac was talking about fuel subsidies, food subsidies, product market interventions, which we know are effective now, but are very costly and bring all sorts of distortions in the economy. If we talk about fiscal costs, the third part that is of worry, and we've seen these graphs in the presentation of the Commission, is the dynamic of public debt. We know that Lebanon is already in default, but oil importing countries, which were the focus of the Commission, are seeing complicated times ahead. Just to give you statistics, in Egypt, the interest rate expenditure to service the debt is half of the revenues that are collected by the state. So when Dr. Ishac was talking about that, private investment isn't happening, public expenditure isn't really supporting long-term growth. If you think that half of your revenues goes to service the debt, it becomes almost immediate. You see that type of displacement. Now, what we see now in oil importing countries is the product not only of the shocks today, but also vulnerabilities that have accumulated over time. And if we think about growth in the past 20 years, just the back of the envelope calculation shows that countries in the region would be up to 30% richer in terms of GDP per capita had they grown at the median rate of growth of a middle income country in the world. So it is true that this is a region that with its beauty, culture, and potential lives inside that frontier of potential. And I'd like to conclude this first round of my side by thinking about some of the recommendations of the Commission, which are, I think, for me, very sensible and very thoughtful. Something that I would add there is not only to think about promoting growth through the accumulation of human capital, through more labor force participation and investment, so through the accumulation of factors, but by changing I'm thinking about the solo model, and I'm thinking about the part of institutional improvement that is needed to make this machinery move from a low growth equilibrium to a better equilibrium for everyone. So let me stop here, and I'm happy to elaborate more.
Well, thank you very much, Roberta. That's a very sort of rich response and initial sort of comments. Let me turn to Jihad, Dr. Azour. Thoughts from the report? Obviously, the IMF is already transforming a lot of what it does. What are your top line thoughts from the report's findings and recommendations?
Well, thank you very much. And I would like to also congratulate the team for an excellent report. The recommendations of the report converges very well with fund thinking and what the fund is trying to do. Let me maybe start by where do we stand? I think the selection of the countries is relevant, but there are other countries that also deserve attention. Some of those countries who are in conflict and fragile situation, I think this is a group of countries that is also facing an important challenges. And talking about MENA, especially on the oil importing side, would require us also to integrate those. On the context, I think we also seeing that the succession of shocks have increased the level of vulnerability that is not currently translated in the top line numbers, i.e. growth. Of course, we saw during COVID that fragility of economic systems have widened. And to illustrate that, I would take two examples. For informality used to be usually the first line of defense whenever you have a shock. In this crisis, informality was not, at the contrary, in fact, penalized the capacity to respond. Two, the level of unemployment, which was already an issue, went up, and women participation declined because of the nature of the COVID crisis. When you add to that, that recently with the increase in inflation that is mainly headline inflation, food and fuel, this is also having additional strong impact. Compounded with that is the change in the course of capital flows. In the last 10 years, when you look at the situation in the region, the massive part of capital flows were portfolio flows, less FDIs compared to the first decade of the century. Now we see a reversal of capital flows, which will reflect in not only increase in interest rates, but also in the capacity to refinance. Therefore, I would add those elements in order to show that, yes, definitely, it's very important to move and to move now. This is on the context. What needs to be done? I think we are all converging on the pillars. Let me start maybe with the policies. On the fiscal side, clearly, consolidation doesn't mean austerity. You can have growth, inclusive, friendly consolidation. And I want to stress on that because this is an element that I would like the team to reflect more on, is how to use tax policy. Recently, we issued a report that shows that progressivity in tax system is achievable. Eliminating some of the loopholes that exist will increase revenues and increase equity. Equity, and this is something that is also one of the political dimension in any society and any social contract is the tax system. I would encourage very much the team to reflect more on that. On the expenditure side, here again, recently we did 2 studies that are, I think, interesting to compare or to share the results. Social spending is 2% of GDP. Subsidies in most of the countries is between 4 and 5 to 6% of GDP. Subsidy has proven to be very regressive. Therefore, resorting currently to subsidies in order to address, it may have a very short-lived impact, but this is definitely not the right approach on the fiscal side. However, what COVID showed us that we can improve our social protection system. Using technology in many countries have been effective. What needs to be done? The problem is a problem of data. We don't have updated household surveys. Therefore, we need to improve on that. We need to share those household surveys in order to have a better targeting. Therefore, fiscal provides more flexibility than we think. And we recently issued a book on inclusive growth that addresses those different dimensions. Therefore, I would encourage us to think beyond the classical ways of looking at both expenditure side and revenue side. But fiscal is not only a flow issue, it's a balance sheet issue. And this is where the SOE's reform is very important. Also here, one headline number to illustrate. The fiscal cost on average is more than 2.5% of GDP, higher than what we spend on social. Our study showed that this is not only an issue of fiscal transfer, but also of leveling the playing field and utilization of resources. And also the balance sheet of the state carries a lot of contingent liabilities that when the wind changes becomes really an issue. Therefore, I also encourage all of us to look at how to reform the SOE system, not only to reduce their fiscal dependence and to improve their reliability, but also as a way to open up growth potential. Because we are all talking about growth and we need to find ways to do this. This also leads me to one of the issues that in the last 10 years we were facing. Deficit went up because expenditure went up. But when you look at the composition of expenditures, did not go in where expenditure should go. When the wage bill increased, in fact, prevented many who needed the social support to get it. It eroded education, it eroded spending on health. And during COVID, we paid the price for it. Therefore, I think it's very important also to, and this is highly political, to have the courage to say those reforms require political capital and need to be made. Therefore, on the how, this is on the fiscal. But again, some of those countries have been subjected to external shocks. And here the monetary policy has to play. When I heard devaluation in Egypt, in fact, we moved to a flexible exchange rate. And the flexible exchange rate required to have a monetary policy that used the monetary policy tool. Therefore, I think we have to move from fiscal only to use all the tools of macroeconomic policies. Fiscal, financial, monetary, as well as also real. On the financial, one of the issues that the region is facing is access to finance, that is limiting inclusion. On average, access to finance is between 3 to 4%, when in emerging economies is around 14 to 17%. Bringing this level to comparable levels is in itself will bring huge inflows to the system and compensate for the crowding out, especially that recently we see that the nexus between state and the financial sector has increased, i.e. the financial sector is now holding more and more public debt. Reducing issues that require some, integrated policies. Women's participation is really an issue. If we only reduce the cap by 50%, we have windfall of more than $1 trillion in the next 10 years. Therefore, I would encourage us to look at policies in broader perspective, see how they integrate, understand that those policies to work need to have capacity and need to be well communicated. I think this is also one of the issues that we are all facing and faced in the past. Who should do it? Let me start with us. The program of the fund, the programs of fund are short-term in nature. And usually they attract the reader for their fiscal side, not for their structural side. If we take the case of Jordan, Egypt, Tunisia, there are a lot of important structural reforms that were introduced, including on the social transfer, takaful and karama, all the shift in the subsidy utilization to be more targeted. This is part of the program. To have specific measures, for example, related to women's participation, those are issues that are in the program. But unfortunately, all the focus is on the short-term stabilization and much less on the transformative dimension of our programs. The second issue that we have in our programs, our programs are between 3 and 4 years. The transformation requires a couple of decades. Therefore, whenever you stop a program, those moments between programs or when you end a program, you have a risk of unwinding some of the efforts that were needed but not yet completed. And therefore, this is where the role of integrated approach between institutions through a medium-term aspirational contracts, economic and social transformation contracts are important. And this is where the dialogue with the broader community is very important. And also we have to confess, but that there are external shocks. Take the case of Tunisia. In 2014, Tunisia was subjected to a certain number of security shocks that affected the situation there. Therefore, I think this is an important thing. And we did a retrospection on our programs. And we identified certain number of issues in terms of our assumptions, in terms of the duration of programs, etc. Now, in certain important dimensions, we're moving to a longer-term programs to address issue of resilience and sustainability. But I think what we need is a more framework approach and a better donor coordination and better coordination between what institutions could do, bilateral do, and the private sector can do. Therefore, this is on who. There is another dimension of the who that is very important. Currently, we are at the point where if we move too little, too late, we will repeat something that happened in the past. The urgency of the moment is not reflected in the numbers, but for those who know the region well, know that this is a moment that requires special attention. And we urge decision makers to look at, how to not lose opportunity now, use the resources that are maybe scarce, but to move very quickly. Last point, which is mentioned and had our special feature in the report, which is debt. I think the countries we have here are in different nature. We have two countries who are already in debt restructuring, Sudan and Lebanon. Sudan is in the HIPC process. Lebanon is in somewhere in between, agreeing on the policies and moving into the action. While others are in different situation, and their debt is different. All of them has a debt issue, but dealing with it requires different instruments and different policies. And this is where I think it's very important to take them case by case, yet there are certain number of important elements. Fiscal is not enough. Confidence now plays an important role in order to allow the fiscal dominance and therefore allow for a wider range of sources of financing. Two, the regional cooperation is very important. We see interest in providing assistance and support. And I would say that gradually the integration or the coordination between bilateral and what the multilaterals are providing, including us as a fund, has improved. We need to strengthen this framework. And also we need to make sure that it is a reform-based. Of course, each shock requires a different solution. In 2020, when we provided immediate support, we provided it because countries needed it immediately, and therefore it was not attached to conditions. When you need to help countries in their transformation, you need to support reforms and to put weight behind those reforms. Last but not the least, how to innovate. Innovation takes different forms, and the fund is trying. I would say this is a big move. We have moved with the RST initiative to longer-term financing, which is something that is not in the culture of the institution, but also we did not only respond during COVID with an immediate assistance. Now also we have a food security initiative also to address the immediate impact. Some would raise the valid question. If you don't put certain number, or if you don't promote certain number of reforms, what you provide as assistance could delay those reforms. It's a very valid question. And I think this is where we need to have maybe, like we are trying to do with our conflict and fragile states, a kind of a medium-term collaboration framework. We need maybe to mainstream this also with other countries, whereby the relationship or the coordination or the cooperation goes beyond programs. I'll stop here because I see that you brought your mic up.
I brought my mic up, yes. We are running extremely short of time. I didn't want to interrupt anybody because everything that is being presented here is of such great value, very insightful, and resonates very well with the findings and recommendations of the report, but I'm very well aware of time. We do want to move on to our next panel, since we still have basically 30 minutes of this session. But I did want to turn, if you have any final comments or remarks, Dr. Ibrahim or Dr. Ishac, from what you've heard from the World Bank and the IMF briefly, before we turn to the last panel. Also, Roberta, if you have any comments, and I see from your face that you do. Let me turn to Ishac and Ibrahim first, and then Roberta. I'm afraid we might not have time for audience questions, but you can catch our speakers here in the hallways and ask them. Dr. Ibrahim, any thoughts?
Yes, thank you, Paul. I think this is, these are very thoughtful and relevant responses from both Roberta and Jihad. And I think this should be a start of a conversation with the scholars and policymakers in the region along these lines. And I'm particularly impressed by the idea that the IMF should be thinking about broadening the engagement beyond the particular program of adjustment. I think that's very important. And I know already the World Bank is, of course, is much more tuned to this idea, given the wider engagement of the World Bank with the region.
Yeah.
Thank you.
No, I mean, this is music to our ears. I think that the pieces of the puzzle are well understood, and the institutions are doing their job very well. What is missing is a social debate in the countries. It's the thoughtful discussion in the country, which you could help with much more brutal honesty. I mean, you speak of the gravity of the situation, but your documents don't speak so much, don't ring the alarm sufficiently, given the actual gravity of the situation. And civil society, the private sector need to really get mobilized to be able to play their role. And their role may well be to tell you, we need much harder conditionality. We need to really mobilize the political elites into doing what they need to do and not focus only on myopic short-term security, because this is taking us, like it took Lebanon, into the war. And how to avoid that war. So I know the IMF, the World Bank keeps calling for this social debate, but hopefully the mobilization will also come from the region, and this is really our part of our job.
It takes two
Thank
to
you.
tango.
Exactly.
Thank you, Ishac. Two at a time. We have 4 here, so it's complicated. Roberta, final thoughts or comments from this panel?
Final thought on, we heard a lot on the what needs to be done and also on the who. And what I wanted to add as a final comment to this excellent conversation was on the how. And I wanted to build on what Dr. Ishac was saying, which is we need to have more debate, and the state, which is so important now in moments of uncertainty and multiple shocks, needs to have measures for how it is doing well or how it is not doing well, and align the incentives to be accountable, to be able to change things over time. In our report, we call it the learning state. But just to give a simple example, and I'm going back to what Dr. Jihad was saying, our countries have very limited data access. That's the one dimension on which statistical offices which have very significant technical capacity fall short. Having more data access would be one way for the state and the civil society to be able to measure what we, the state and multilateral institutions do, and to be able to adjust. And so here I wanted to conclude with a word of being humble. We sort of know that some policy directions are important, but with these multiple shocks and increased uncertainty, it's very important to sort of measure along the way and make sense of where we land. And that's also where we could have more debate within the society, more homegrown, through that more transparency and accountability. We call it a learning state. I hope this is going to be one how in which these important policies then get started.
Fantastic. I want to thank Dr. Roberta Gatti, Jihad Azour, Diwan, Ibrahim Elbadawi for everything they're doing in their various institutions, but for this very rich panel.